Hello everybody, and hello to anybody who is re-watching this. This is our live video on navigating student loans, expert tips for financial freedom with LoanSense. And let me go ahead and invite them now. We're still a little bit early, but let me go ahead and do this. And please give me grace, y'all. This is my first time doing a live, so it should be fun and interesting. Okay, invitation sent. Excellent. Okay, so while we wait for them to join us, we had a recent Instagram post on Stellarfi on Halloween costumes. So while we wait for our guest, since I can't really banter with you guys live and in person, I'll just share some of our Halloween costumes that we posted that are fun and, you don't really have to spend a lot of money on them. And this is the post I'm referring to. You can find it on our Instagram at GetStellarFi. Well, you're on our Instagram, so you know exactly what the handle is. So, okay, a recent one, risky business. All you need, button-down shirt, biker shorts, socks, slippery floor. That's a fun one. Let's see, The Bachelorette. I don't know if we have any Golden Bachelor fans. Oh, thank you for the compliment. Bama Booski, I see you. And anybody else who is in the comments, feel free to send a wave or a hello, or if there's anything that you're particularly curious about with this live, drop it in. Or, since we will be talking about student loans, let me know your student loan thoughts, worries, concerns, questions, and maybe to keep it positive, if you have any aspirations for paying off your student loans. Personally, I too have some student loans that I am looking forward to paying down and having, that debt off of my mind. But there's a journey ahead there, but I'm sure many of you on this live are in that same position. Okay, back to the Halloween costumes while we wait for our guests. Okay, Bachelorette, all you need, a dress or, a suit, whatever is more your vibe. Student loan, I see your comments. All you need is that and some roses. What else? Work from home employee, pajamas. As a work from home person, I can guarantee all you really need is pajamas and a cup of coffee. And one more easy Halloween costume before I check in on our guests. And let's see, which one do I like best? Let's go Carmi Brizzato from The Bear. That one's super easy and has been very popular. White t-shirt, apron, and, something to draw your tattoos on. So let me go ahead and check in on our guests, make sure that they are invited to join. Okay. I invited them to join, but like I said, y'all, this is my first time doing a live, so there may be some learnings along the way. I really wish I could, really interact with y'all, hear y'all's voices. Okay, bear with me as I send this. Hello, Hallie, I see you. Very excited for you to be here. This deafening silence. I thought about having a playlist for this, but then I was worried about copyright infringement. So I was like, let me not even get into that. Oop, nope. Sorry about that. I'm just clicking the buttons to make sure I invited them and they can see the invitation. Do 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 do. Jeopardy music. Let's see. Thank you for bearing with us, y'all. I see everybody who started the live is still here, so we definitely appreciate your patience. Oh, my LoanSense joined. There we go. View requests. Huh. Okay. Oh, excellent. Hi, can you hear me?
Yes, perfectly. Can you all hear
Excellent.
me?
Excellent. Oh, I love your glasses. Beautiful blue.
Thank you. Matches the curtains.
Yes, it does.
It's our and my favorite color. So
Mine is canary yellow, but I don't have it on today. Or actually, I should say Stellarfy red, since I'm on the company. Uh, okay, so I will go ahead and get started. So thank you for those of you who are watching us live. I just invited Catalina. She's on with us now. A little bit about me. I am your host for today. My name is Stacey Fernandez, and I am part of Stellarfy's wonderful marketing team, and I'm your host for today. Enough about me because I am not the star of this show. Catalina is. I'm really excited to have her on. She is the CEO of LoanSense. And don't let her title fool you. You know, that big CEO title. She is not your average executive. She has an extensive and very impressive educational background. She's got the brains and the brawn. Catalina's journey to founding LoanSense reads like an adventure novel. She spent a whole decade immersed in financial inclusion and even earned a nomination for a Bill and Melinda Gates Fellowship, which we know is very prestigious, where she championed higher education, finance, and policy. She's even personally advised clients buried under a mountain of $200 million in student loans, which, as I was saying earlier, a lot of us can relate to being, buried in student loan debt. So she really knows her stuff. She knows what she's doing. And she's not just a behind the scenes genius. Catalina's insights and expertise have graced the pages of big name publications like Housing Wire and Next Advisor with Time.com. And she's a rock star writer with BestMoney.com. Today, Catalina's here to share her extraordinary journey and give you the lowdown on managing student loans like a pro, which we all need some of those tips. We need some help. Student loans just restarted. So get ready for a fun and engaging interview where we'll dive deep into the world of education, finance, and a whole lot more. Okay, now that my script is out of the way, let's get into these questions. Anything you want to say, Catalina, before I jump in?
well, first and foremost, you might hear my son in the background. So I wanted to put that out there.
No
But
problem.
no, yeah, excited to dive in. A bit about just a bit besides all that credentialing, which I guess makes you qualified, but more as a human, why I care about the student loan problem so deeply is because in 2015, I tried to go buy my first home
Mm.
and I was denied. I was told, pay down your student loan debt and come back later. And I know a lot of Stellarfy users and audience have other goals. That's why you want to improve your credit, right? So being told, no, you can't achieve something because you have barriers or obstacles, there's two main responses as humans we do. It's like fight or flight, right? Some people will say, well, I'm just not going to try again for another 10 years or more because it's too traumatic, or I'm going to fight.
Yeah.
And my response was, I'm going to fight. So I started, I studied policy in undergrad. I started reading the rules and I found out that if I enter in a different student loan program, that I could improve what's called the debt to income, which is the lending formula. And as a result, I was able to close on my first home just 45 days later after I thought initially I would have to eat ramen for like 5 years in order to pay down my debt. It's just simply untrue. And so I think educating people on what are the financial tips and tricks they should be considering for their scenario. It's not only about interest rates or what general advice you might hear online. Like, there are very personalized details about what we're trying to achieve and what our financial standing is that could help us. So long story short, 45 days later, I was able to close on my first house. And then like 2 or 3 years later, that was when the news was blasted everywhere about how student loans is now the largest obstacle of millennials from buying a home. And I just thought to myself, like, who is solving this pain point?
Mhm.
It's just it's a missing part of financial services, getting solid student loan advice. It's just missing. You can go, there's apps and all kinds of things to help with credit cards, even credit, but student loans, it's just not really there. It's missing in the marketplace. So I decided I was going to start LoanSense. So that's a little bit about, it was like a personal journey, a struggle beyond the work that I was already doing. It's what sparked me to care so deeply about this, that I wanted to not take a regular job and start a company, which is extremely challenging. But that's a whole nother topic. So
Like you definitely did go into fight mode with this. That was definitely your response. And thank you for sharing a little bit more about your story and what really makes it personal for you, because I know everybody has that, like, not everybody, but a lot of people have that personal connection to it. And off of what you just said, in your opinion, what are the most critical financial challenges that people are facing today, and how does LoanSense specifically address these challenges? Obviously, that relates to the experience that you just shared.
Well, I think consumer debt in general is just ballooning, like not just student loans, credit card debt. People who were able to buy are refinancing, taking cash out. Consumer debt is just a huge, huge problem. And I just want to empathize with those that earn a paycheck and feel like it's just not enough to pay all the bills, especially if you live in an urban area. You're stretching to pay the bills, and then whatever's left over, it's kind of like gets put on credit card, or you buy basic things on credit card, and then it turns out, well, if you can't pay it, then it rolls over, and then the credit card balance just starts rolling. It just starts building up and up and up. And then, so I would say that that's probably the largest. Consumer debt is the largest obstacle of Americans from the data, not just for moderate wage Americans, but also high earning Americans. Consumer debt is just out of control. So I say this not as a criticism of anybody in debt. I say it more as a, no, you're not alone. That, this economy and what has happened over the last 3 years has been a pretty significant challenge. And so just know that you're not alone.
Yeah, there are millions of people in this position. And out of curiosity, are you still paying off student loans?
It's so funny because I finally paid off my undergrad loans, and then I went back to get 2 master's degrees.
Oh my goodness.
So yes, I'm still, but this goes into like what we're going to talk about, student loan management. I made a strategic decision not to eat ramen and do nothing but pay down my student loans. I made a decision not to, because I wanted to make sure I was saving for retirement. I did other things with my money that I think also builds long-term financial well-being, because money, it's not just about interest rates, cents and dollars. It's also about what helps you sleep at night. And I think oftentimes in financial advice, that formula, that emotional well-being is often left out. So if I concentrate on only paying off my student loan, and I didn't have retirement savings, or I didn't have secure housing, right, for example, then by numbers, dollars and cents, student loans, credit card, high interest rates, that dollars and cents may make sense to pay off first, but from a financial and emotional well-being, that doesn't, for me. Like, I don't have any financial safety net, right? That's a solid example. So for me, I made a strategic decision not to accelerate paying off my student debt, because future financial stability is more important for me than saving a few dollars on 7% interest rate, if that makes sense. And I say this, I speak in a way that I hope others that are watching this or will watch this can relate to.
Yeah, no, definitely. I totally hear what you're saying, of having a financial safety net is putting everything into perspective. Everything does not exist in a vacuum. You have to have that safety net and also balance quality of life while also thinking about that debt. Okay.
Right. I'm not saying ignore it, right?
Yeah, definitely not what we're saying, but put it in context
Mhm.
and put it in context of your other goals, which leads us right into the first question. What are the first steps that someone should take if they're struggling to make their monthly student loan payment?
Oh yeah, one of my favorite questions. The reason it's such my favorite question is because um, it's a real
Mm-hmm.
problem. In fact, those coming out of grad school, not undergrad, but grad school, are graduating with more debt than their first year earnings. It's more common now across every degree type, so it's a real issue. Um, the first thing, I have what's called solid rules of thumbs that I'll share with Stellarfy so you all can post it. The rules of thumb go like this. There's two ways to pay off your student debt. You pay it off as quickly as possible, like your hair's on fire, or the federal government allows you to pay less each
Yeah.
month. And let's say your payment is, let's say your payment's $500 and the government says you can only afford 150. That 350, you can get that interest month over month forgiven
Mm-hmm.
if you enroll into what's called an income driven plan, right? So there's a couple methods: pay it off like your hair's on fire, or pay less and track yourself into loan forgiveness. There's those two possibilities, and who is best for which scenario, right? I love to talk about this because, for example, if you have a stable job where you have significantly less debt than income, which means, for example, you earn 50,000 and you only have 10,000 in debt. You earn clearly 5 times more than the amount of student loan debt. So you probably have enough to accelerate some of the payments. Or let's say you have $50,000 of earnings, but you have 50,000 in student loan debt.
Yeah.
You don't actually have the income to pay and accelerate that payment because you have too much debt relative to your income. So I like to think about what's your balance relative to your income. So if you have anywhere near, like if you have 50,000 in income, if you have even 60 to 70% of your income in student loan balance, then you're not a good candidate to accelerate payoff.
Mm-hmm.
You're just not, because you just won't be able to afford anything else, right? So for those that are high earning, let's say you come out with a banging master's degree, you are in the private sector, which means you're not a public servant. You don't get access to accelerated forgiveness. You're in the private sector, you earn decent money. Accelerating and paying quickly like your hair is on fire is a great approach. If you have too much debt relative to your income, like I discussed, or you work for government nonprofit, then those are the individuals who need to consider paying less each month and getting loan forgiveness. So those are the two rules of thumb. Obviously, not everybody fits into everything like clear black and white. There's always that gray. Like there's people who will come to us and say, well, I don't really know if my employer, if I qualify for loan forgiveness, right? So that's why our application and our software, our web app, similar to Stellarfy, you all have a web app. We can give a complete free analysis to anybody at myloansense.com. You just sign up and we give a complete free analysis, and you can see based on your current student loan and your income if you can get loan forgiveness and what that looks like, right? So then that will help you decide, okay, if I can get loan forgiveness, is this a good strategy for me to consider relative to eating ramen for 5 years and doing nothing but paying off your debt, right? So those are a couple. I hope that was understandable. Do you have any clarifying questions? Because I know I talked a
No,
bit, so.
I think that was definitely understandable. And yes, people don't want to eat ramen all day because that's a lot of sodium. But my one too much sodium. One question: is applying for those programs difficult? I know that some people are worried about how much paperwork they have to do, whether they even apply. So, if somebody were interested in that, is it difficult?
You can do it on studentaid.gov, and some of the servicers allow you to do it direct, but it's not about just answering the questions and checking the box. It's also about knowing what the best proof of income to use is. And it's also about, especially if you're going to go the student loan forgiveness route, It's also it's also about knowing when to submit your paperwork, because the strategy is you pay the lease over your repayment period, right? There's also some complications on, there's multiple plans. So how do you know what plan to select? So yeah, in general, going on studentaid.gov and just filling out some check marks is easy, but it's about doing it correctly and doing it in a way that actually optimizes and increases the amount of forgiveness you get. So for example, if you earn less money this year, submit your pay stubs instead of your last year's tax return. If you earned less last year, you want to submit your last year's tax return rather than this month's pay stubs, right? There's some strategy around what you should use as proof of income. So there's, in general, going on and checking the boxes isn't complicated, but it's really understanding what paperwork to enroll. And also, if you are a public servant, there's additional sets of paperwork that your employer needs to sign. My general rule is, like, if people have significant debt relative to their income, it's always, and if they want to set themselves up for other financial goals, it's always good to get some guidance outside of just the servicer, because the servicer, they're there to make money when you continue to be in debt. They don't make money with you getting out of debt or getting it forgiven, right? That's not how, their incentive isn't there to actually help you. They just have minimum account service requirements. So they don't actually give advice. They're not allowed to give any advice, actually. So they could just say yes or no, this is allowed, this isn't allowed. Okay, we received your paperwork. So I recommend, obviously, for the most part, if your situation's pretty simple, like you aren't a public servant, you just started working, so you don't have that much proof of income, checking a few boxes is fine. But if you've been working for any number of years, you have a lot of debt, you may qualify for loan forgiveness. Those are definitely scenarios in which you should speak to someone that can help and make sure you're on the right track, because it literally can mean thousands of dollars in errors over time, right? And you want to make sure you're holding your servicer accountable to counting your payments so that you're not paying forever. Like, we've had people come to us that are like, I've been paying for 20 years. Why am I not done paying? And they don't even know if their servicer has counted 20 years of payments. Like, it's the only system that until Biden recently, when he came into office, announced rules that servicers have to track payments. Do you know the last 2 decades, servicers weren't even tracking people's, the number of payments? Like, if you called up your servicer and said, how many payments have I made? They would take 6 months to review before they got you an answer on how many payments you made.
Oh my goodness.
Oh my God. Yeah. Like, they're not tracking it. It's crazy. And so it's just recently now made a rule that they have to track how many payments you're making.
And that, of course.
So anyways, I'm sorry. Go. No, please ask your
question. Oh, no.
I don't see your face, by the way. Oh, I don't see your face, by the way. Is that just me?
It might just,
because I can't read expressions.
Oh, I'm so sorry. Okay. Somebody in the chat, please comment whether you can see both of our faces. It might just be a technical glitch, but please, somebody leave that in the comments.
Oh yeah, that might be my app. I don't know if it's just my app or.
Yeah, it sucks not being able to see facial expressions. I'm sorry. Okay, let me go ahead with the next question.
Yeah, no worries. Please ask away. I just wanted to make a comment in case somebody else.
Okay, they can.
Other people watching.
Okay.
Oh, okay, awesome.
Another question. So I know that you talked a little bit in your opening statement when you were telling us about your lived experience related to student loans, credit, homeownership. And a lot of people right now are worried about their credit scores, and especially if they're struggling to repay now that repayments have started again, how this might impact how student loan payments or not paying might impact their credit score. So can you tell me a little bit more about how, especially somebody who isn't able to pay right now, how non-payment would affect their credit score, and how?
Okay.
Oh, sorry. Go ahead. Go ahead and answer that first.
Go on. Well, first of all, Biden rolled out what's called on-ramp into repayment, which is telling servicers that they can't report any delinquent or late payments for 1 year. So if you miss payments In fact, I recorded a video about this today for our YouTube channel. If you really can't afford to pay, I would, number one, recommend, I would not just say stop paying your student loan because it's not going to be reported for a year. I do not recommend that. What I recommend is getting into a plan that's based on your income that you can maintain over the lifetime of repayment. That's what I recommend. And even if you are doing it now and you have to make 1 month's payment, let's say you really can't afford to make it, then you miss one payment, right? You could even possibly even make it late. But the point is it's not going to negatively impact your credit score because right now the on-ramp into repayment makes it so that servicers don't report it to the credit bureaus for 1 year. However, not paying, the reason I don't recommend it for 1 year without doing anything is because you want to fix the root of the problem. The root of the problem is you can't afford to make the payment. So why not get into a program that helps you manage your payments over the long term? And I highly discourage people from getting into forbearance again. Just don't do it because those don't count towards any payment. There's people like under Biden's new SAVE program that you could literally get a $0 payment that counts as a payment. So just enroll properly into these programs and then you could get $0 counted as a payment and be in good standing instead of putting in forbearance, which doesn't count as a payment. And then second of all, servicers will often put people in like graduated repayments, which are like, it's almost like a stair step, like 2 years you have a lower payment, then the next 2 years your payment goes up, and then the next 2 years your payment goes up even higher, and then the next 2 years it's even higher. Like I highly discourage people from enrolling into that type of program because by year 4 or 6, from what we can see, people just can't afford to pay it anymore. So then they're enrolling into a different plan, right? So just get into the right plan that's based on your income that will help you afford your payment even after this 1 year period, and try not to miss payments even though it's not being reported because it's about habit building, right? You at Stellify know all about that. The habit building. If you just go without doing anything, addressing it, not filing into the program, just ignoring it for a year, then you've built the habit now that you're just going to ignore it. It's that, and then in a year from now, it's going to start really negatively impacting your credit score because we know the majority of, like we know 35% of credit score makeup is payment history. So don't build the habit. I would say do something now while we have this 1 year cushion so that you could protect yourself when it matters for your credit. I hope that answer makes sense.
Yeah. I think that was incredibly helpful. I know people are confused about what to do. There's a lot of guidance in articles on TikTok. Everybody's talking about this, but it's difficult to know exactly how to move forward. And not paying at all seems very attractive to some people. So I think that was helpful.
Absolutely.
And bringing things back to the intersection of credit and mortgages, what role does credit history play when applying for a mortgage, and how can individuals with student loans build a strong credit profile for homeownership?
So credit matters as in, I mean, interest rates are considered quote unquote high right now. But obviously the better credit allows borrowers to access better interest rates. So that's how credit matters in the home buying process. Also, if somebody has under a 550 or 620, depending on the mortgage product, they just can't qualify for mortgage, period. So obviously you don't want to be in the bucket of people under 620, I would say, to be safe. So that's how it impacts buying a home. But student loans, how does student loans play into it? Student loans plays into it, not just student loans, but every form of debt, is because you can only have a certain amount of debt relative to income in order to qualify for a mortgage. And the rule of thumb I like to use is 43%. So if 43%, without getting into a lot of numbers to bore people, just a general explanation is your monthly payments shouldn't be more than 43% of your income, right? Medical debt depends on the amount of debt and the status of the medical debt, because I just saw the question. But medical debt doesn't count towards the debt to income for the most part, unless it's like a loan or a payment plan you set up or something. But medical debt isn't something that's in the normal debt to income. Normal debt to income is like your student loans, your minimum credit card payments, your car payments, things like that.
Mhm.
So the rule of thumb I like to use 43%. And so if you have a high student loan amount, let's say you earn 5,000 and you're paying 1,000, your payment's 1,000 your student loans, that's already taking up 20%. How are you going to afford a home when you only can get 23%, 3% more of your income to get a mortgage, right? So by basically lowering every form of debt, you can increase and optimize the amount of home you can buy. That's how the formula works. And so at LoanSense, by helping people better manage their student loans and helping them with their income docs, helping them submit the paperwork, helping them get access to loan forgiveness, even helping them understand how to file their income taxes if they're married or considering getting married, how to potentially file their income taxes so that they could lower their payment for each person, each spouse in the relationship. That will lower the debt to income by a large amount of points. I would say 5 to 15 points on the debt to income, which will increase the amount of home somebody can buy. And that's how student loans is related to home buying. And also, I hope my explanation explained how the credit helps with buying a house.
Yeah, that makes a lot of sense.
Yeah.
And I'll ask one more question and then open the floor for anything that you wanted to say that we didn't cover. But are there any common mistakes that people make when trying to manage student loans and save for a house, and what can they do to avoid them?
So mistake number one is like struggling, feeling like hopeless, like I don't know what to do. I called my servicer, they told me to do this. Now I'm getting this type of paperwork. I don't really understand what it means. I would say don't struggle by yourself. Like, come get a free plan from us, like join our educational resources. Don't do it alone, because like when you go take out a mortgage, there's always that loan officer there to assist you. When you go do pretty large purchases, there's always someone there by your side. Yet with student loans, it's not that case. It's like you graduate and the financial aid office basically says, good luck, figure it out. And it's just actually one of the most complicated forms of debt because there's so many different programs and nobody there to explain it. So I'd say don't struggle alone. That is my number one tip, because struggling alone could literally cause you to go into default. It can cause financial ruin. You know what I mean? And after the on-ramp into repayment, the government will start garnishing wages again, start with collections. So my tip is like, just get a hold of it. Just do something now, and to just get information that will help you better manage it now, rather than trying to like figure it out with just calling your servicer and figuring it out on your own. It's just not, it's sometimes hard, and the studentaid.gov is just full of a lot of words that isn't personal information or personalized to your scenario. So it might be really hard to interpret. And then the letters, just don't read the letter. If you read the letters and don't get them, like that's common. Like we can even help interpret that. But the point is like, just don't struggle alone wondering, what am I going to do? And to save for a house, one quick point, just put away whatever percentage of your paycheck you can afford, or your earnings. If you're a gig worker, like put a percentage of it away. If you can, like, even if it's small, even if it's like 2 or 3%, 2%, 1%, whatever it is, it's like $5 a week. Like just start doing it, because again, it's just about the habit more than the amount of money, you know? And so that would be my pro tip on like saving for the future. Even if you feel like, oh, I'm so much in debt, I should be paying that off only. Like I would still say, just start small, just start something, and just start saving something, you know? That's my advice.
And before I close things off, is there anything, as a person who's in this world day in and day out, anything that you want to say to our viewers or leave people with that we haven't covered?
I mean, I think following Stellarfy and your all's content, especially if credit is an issue, is like a really great start to fixing your situation. That there's always hope. Don't feel demoralized. Don't let like anxiety around management of all these different financial decisions get to you. And I would just want to say, like, my final thought is like, if you fall and slip and you break your leg, in the medical system, we treat that very differently. But if you're like suffering from just so much stress from your financial situation and you have mental health problems because of it, and you have anxiety, in the US, we treat that as not as serious as breaking your leg, when in fact it's as serious. So just take care of yourself, emotionally, mentally, and financial well-being is one of the main contributors to Americans' mental health. So I want to say, if you take care of yourself, you go to the gym, workout, you do self-care, that like investing in your financial well-being is a huge part. I would say is one of the largest factors in financial well-being besides physically working out your body. So I just want to say that, because I think sometimes we forget that, and we deprioritize the things that will help us with our emotional well-being, and only prioritize the physical well-being. So I just wanted to end on that note, because I think following resources like Stellarfi, if you have student loan issues, coming at least to get a free analysis at myloansense.com, coming into our web app, again, completely free to get an analysis, that could really contribute to better financial well-being, which can help you feel less stress and feel better in general. So that's my final thought.
Thank you so much for leaving us on that positive and contextualized note. I really appreciate it. And like Catalina said, you can get a free analysis on your student loan reduction at myloansense.com/Stellarfi. Again, myloansense.com/Stellarfi. It's a free plan, and it'll allow you to get an estimate on your student loan reduction amount. And keep an eye out on our story, where you will be able to easily find that link for LoanSense's free analysis. And
do you mind? I just posted it just in the chat, just so people have it.
Great. Yeah. Everybody click that link in the chat, copy paste it, do what you have to do. Get that link there, or if you're not able to grab it, it'll be in our story. And thank you again so much for joining this live with us, Catalina, and everybody else who is on here.
Yeah, no worries. One final thing, I posted an email. If anybody has questions, our customer service support line is there, info@myloansense.com. We're happy to help answer anything. And thank you all so much for your time today.
Thank you.
And for inviting me on.
Of course. Thank you for your expertise. Bye.
You. Have a good one. Bye.